Hey guys, Nate Corrado here. I hope everybody is happy and well and healthy. Um, I am going to start posting some real estate videos. So I'm going to post these probably every other week. So you should be seeing a couple a month. And these are just going to be market updates, tips and tricks, what to look for in a realtor, how to improve your home value, things like that. So hoping I can just bring you guys a lot of value out of this and kind of help you understand what's going on in the market and what kind of strategy to use and how to get the most out of your investment. Um, so, no case is the same and everybody's situation's a little different. So if you have questions, obviously call me, text me, reach out, and we can have a more in-depth conversation about it. But hopefully this kind of gives you a general idea where the market's going and what's going to happen. So follow along, share this with your friends if you find value in it, and hopefully I can just help you guys make good, sound, wise decisions. So this first one, I want to talk about just what's going on in the market and what I'm hearing a lot of from 20, 30-year-olds looking to get into the market and maybe how to attack that and what strategies to use. So what I'm hearing a lot of is a lot of millennials, 20, 30-year-olds who have been saving cash. They want to get in the market. They've wanted a house for a while, and they've just been waiting for this thing to dip. And, they could have been waiting 3, 4, 5 years for the economy to pull back because we're taught, it's an 8 to 10 year cycle and it's going to pull back. And 2008 was so bad, and it's been, 8, 10, 12 years. And what's going to happen in the market? Why aren't prices coming back? So I just want to show you guys kind of what's going on in the market and what's happening to prices and what I think we can expect the next 5, 10, 15 years in the market. Obviously, I don't have a crystal ball. I don't know for sure what's going to happen. But there are a lot of indicators and a lot of things we can use to kind of guide our decisions here. So this isn't a guarantee that prices are going up and down, but it is just my opinion, and I've been studying up a lot on this, so I think I have a pretty good beat on what's going on. So the first thing I look at when I look at pricing is what the Fed's doing. I'm also looking at interest rates. I'm looking at kind of in a more micro level on the Colorado side, net migration, how many people are moving in, how many people are moving out, what companies are coming here, what's the health of our mortgages nationally and locally, and how many people are delinquent, things like that. What's going on with material costs for new builds, and just in general, it all kind of boils down to what's going on with supply and what's going on with demand, and how is that affecting price. So, firstly, I just want people to be careful with this whole I'm going to wait for the market to dip, because I worry that you might not have a chance to get in. Prices have been on a good steady climb since 2008, but I don't know if they're going to pull back. I don't know if you're going to have that great 25-30% reduction in price, great buying opportunity where you can get in on a house that's $500,000 today, and the market crashes and we can get in at $400K in a year. I just don't know if that's going to happen. So I don't want people to miss out on the next 10 to 12 years of the market by not jumping in. So things I'm looking at the Fed pumping a bunch of money into the economy. And what this is going to do is just basically find its way to the assets. Every dollar at the end of the day finds its way to an asset holder. So the wealthy are going to get wealthier, the poor are going to get poorer. We're going to see a larger wealth gap. You see kind of that middle class dwindle away, and that's basically the result of trillion. I think it was $5 trillion last year in 2020 got pumped into the economy. So the result is going to be an increase in the value of the assets, because that's where the money ends up at the end of the day. So you have this delta that's increasing between the haves and the have-nots, and the asset owners and the asset renters. And I just want, as it's wise to be on the right side of that delta. It's whether politically, you can think it's right or wrong, and they should pump money or they shouldn't, but the fact of it is that they are, and I don't think we can expect them to stop. So for me, I want to be on the right side of that and ride it up and be an asset owner that people are coming to rent, or at least an asset owner in my home where I can see an increase in value over the next 10 years. So we're looking at the Fed pumping money. We're also looking at the Fed chair, Jerome Powell. He's talking about interest rates, and I was watching something the other day where he says he's going to keep interest rates low at least through 2023. So we've had low interest rates for a while, but I think we're going to see low or lower interest rates for the next 2 to 3 years. If you look at countries like Japan, who's gone to negative rates, it's a possibility. I don't know if we'll go to negative rates. Could not. But we know that rates won't rise for at least 2 to 3 years. So that gives you so firstly, if you got the mortgage guy reaching out to you saying, you have to refinance right now, it's all-time record low rates, you're not going to get this opportunity again, you have like a 2 to 3 year window here where rates are really low and you're going to have a chance to do it. That being said, you have the Fed pumping in money, you got low interest rates, and something's got to give somewhere. So we're going to see that give in inflation. Low interest rates, money coming in the economy, the value of each dollar is going to decrease, and we're going to see a rise in inflation. And Jerome Powell has also talked about they usually like to keep inflation at 2%, or a little less than 2%, and it's on a trailing 12-month average, and it's also index averaged. So they're taking some items and taking them out of the equation because they might not look right for they manipulate the numbers a little bit. So you got to be careful with the inflation number because it could be a lot higher than it actually says. But they've said they're okay letting inflation rise. And this could mean 3%, 4 or 5%. So, and with trillions and trillions coming into the economy, I think we could see the dollar devalue a decent amount and inflation go up. So your Chipotle burrito every time you go is going to be a little bit and a little bit and a little bit more expensive. Like I remember a few years ago, I mean, this is just normal inflation, but you used to go to Chipotle, you'd have an $8 burrito. And I try to do everything measured in Chipotle burritos, but it used to be 8, and now I feel like you're not out of there for less than 10. Give it a couple more years, you could be out of there for 14, 15 bucks. So your dollars don't go as far. And this changes what you were typically taught about economics. Typically, cash is an asset and debt's a liability. But with inflation high and the interest rates low, that's flip-flopped. Really, cash is a liability and debt's an asset now. If you have an inflation of 4 to 5%, but you can get a loan for 2 or 3%, that difference is positive on the debt side. It makes more sense to have your money in debt, in an asset that is increasing in value rather than cash, which is going to be decreasing at 3, 4, 5% a year. So this is also in a way going to have upward pricing pressure on the market. You have all these big institutional investors, hedge funds. They see inflation rising, so the money's getting pumped into assets. Also going to have upward pricing pressure on assets. And if you think about your down payment or your $10,000, $15,000, $20,000 you've saved to go into a house, and if you're keeping that in the bank and you're waiting for the opportunity to buy, that's just going to become a little less and less and less buying power, especially as the price of real estate goes up, but inflation is also pushing that up. So you got to be careful with cash as inflation rises here. And you see these institutional investors That's why, you see Bitcoin on the run or cryptos on the run. You see gold and silver on the run. You see real estate on the run. It's because they expect inflation to come, so they're putting their money into assets. Um, Another thing to look at is what's going to happen 4 to 5 years from now. So they keep interest rates low, inflation rises, and that's going to start to scare them. So they're going to say, okay, how can we pull back inflation? Well, they're going to raise interest rates back up. So what's going to happen now? In another way, this is going to have upward pricing pressure on the market, especially in real estate, because everybody's already had a chance to refi or get into the house they want at a super low interest rate. Now the interest rates are up. No one's going to want to refinance. They're just going to bunker down and hold their real estate, and there's going to be less inventory in the market. So in some areas that's going to hurt, and in some areas of the country that's going to help. If you're in an area of the country where you have net migration and people moving in and it's a robust economy, that's going to help you because demand's increasing and supply's down, and it's your basic supply and demand curve. Price is going to increase. Other areas of the country, you might have a decrease in demand, decrease in supply, and you'll see prices pull back. But if you look at Colorado, and we have the 5th best net migration in the country, so like Idaho's up there, Florida's up there, Texas is up there, but Colorado's number 5. And you can look at a few reports for this. U-Haul puts out a good report every year. So if you want a real beat on what's going to happen in the Denver housing economy, look at this U-Haul report, because they're showing where trucks left and where they're coming to, and kind of the net migration of moving trucks, and it gives you a real idea where people are moving. Also, LinkedIn does a report where people update their job status or their location status on LinkedIn, and it shows, kind of the migration of people. So LinkedIn studies, it was saying that 1.34 people move in for every person that moves out in Colorado. And then U-Haul puts us number 5 as far as net migration. So we're going to have steady demand. People are continuing to move here. Another thing to look at are what companies are moving here. So you got companies like Wix out of Israel. They're moving their headquarters here. You got other tech companies out of California that are kind of fleeing there, and they're going to Texas, they're going to Colorado. So companies are moving here. You have a net migration of people, and I don't expect that to slow down, especially this at-home economy. You can work from home. So why not work somewhere where that's sweet, where you want to live? And a lot of people want to live in Colorado because it's a fun state to be in. So I would expect our net migration to keep up, and I would expect that we're on the positive side of that interest rate rise in 4 to 5 years, and we'll see even another bump and increase in price because of that. So there's a few other things you can look at. Like right now we got super low inventory that's pushing prices up, like at all-time low inventory in Colorado of houses on the market. You also see a bunch of builders that are stalled out. I think COVID hurt a lot of smaller businesses like lumber mills, where they just shut down and they're not coming back, and that's not something you could just fire back up. So you see the price of lumber going like 3-4x, and new builders have all these lots that they're trying to sell, and in the past you could just dish those lots. Everyone that comes in you can sell a house to, but right now they're releasing like one or two lots a month because it costs them more money to build a house, and their production costs are through the roof. So they're just stalling. They're just doing whatever they can to keep the doors open without building too many houses at a loss. So they're just waiting for those prices to pull back. So right now you have a low supply, and new builds aren't helping because a lot of them are stalled out, and that's pushing prices way up. So I think we also have people not wanting to list their house because they don't want people coming in for an open house and things like that with COVID. So I think we're going to see a flattening of the price this summer. As vaccines get out, whatever you believe about the vaccine, it's coming out, and people, hopefully the psychology of the economy and the psychology of the average American gets a little more comfortable with being in public and doing business. So you should see a little bump in supply. Hopefully, as some of these lumber companies get refunded and start to open up again, you see new builds increase, and that's a bump in supply. So you should probably in Colorado see prices level out a little bit this summer, and it'd be a great buying opportunity to get in your first house. But after that, you have all these like trillions of dollars and big macro events happening that are going to push prices up for what I think is going to be a 10 to 12 year run. So this mindset of I'm going to wait, the price is going to pull back. Eventually, yeah, it's going to pull back. But I think you could miss out on 10 more years of gains if you don't jump in while in the next, you got a 2 to 3 year period where interest rates are low. And in Colorado this summer with inventory coming on, you'll have a easier buying opportunity because there's more options to compete with, and you have more inventory. So hopefully it stabilizes prices a little bit. But this might be your best buying opportunity for the next 10 years, even though it feels like we've been on this crazy run and prices are so high. What's going on the federal level and on the macro level and on a global scale, all the way down to what's happening in Colorado. We have big net migration that we don't expect to slow down. We got companies moving here. If you look at the health of our basically citizens and our mortgages and our economy, our mortgage delinquencies are one of the best states in the country. So you have a lot of positive things happening in Colorado, and I just don't expect prices to have this huge dip where you're going to have an awesome buying opportunity. So I don't want people to miss out on 10 years of gains for fear of the dip, when, like in my opinion, it's not coming. There's not going to be a dip. There might be a leveling out of prices, a lesser increase in price this summer, but after that, the money in the economy and what the Fed's doing and interest rates being low and inflation going up, it makes sense to put your money in an asset. So I hope this brought you some value. To kind of sum it up, you got a lot of money getting pumped into the economy. You got low interest rates for a few years. We're going to see a rise in inflation, and eventually they're going to have to bring interest rates up to kind of level out that inflation. And then in Colorado, you have like 3.8% mortgage delinquencies, when in states like New York, you got like 8 to 10%. So you have a really healthy economy, especially with COVID. We have a healthy economy. We have a good net migration, people moving here, low inventory, stalled out builders, all these things putting upward pressure on price. So I think this might be your best opportunity to buy in a while coming up this summer. If you're thinking about buying, every situation is different, every family's different, everyone has different needs. So give me a call and we could talk about specifically, what it looks like for you guys and your family. Other than that, text me with questions, and I'd love to help. If you're thinking about, what's it going to take to get into a mortgage and getting pre-qualified and pre-approved and things like that, let me know. I got a lot of friends that are in the mortgage business. I also used to write mortgages, so I know a little about it. That can kind of help give you a basic idea of where you're going to come in at. And if you're looking to buy, just hang in there. It's really competitive right now. But if you have a good realtor who's going to kind of go above and beyond, take the listing agent golfing, write a personal note, send a video, do the extra things, you can get ahead in this market. So hang in there. Let me know if you have questions, and I'm gonna have another video I'll post in a couple weeks. I don't know if it'll be a market update. I'm gonna keep an eye on if there's any new news on the market. I'm gonna share it. Otherwise, it'll probably be some kind of tip for people that own homes and how to take advantage of this market, whether that's to buy a rental or do what I do, which is own homes and rent out the rooms. for a higher return. So there might be tips like that coming up. But have a great week, and we'll see you guys next time.